This is apropos. He's generally avoided escalation in the face of Donald Trump's relentless criticism, but in recent months, the central banker has become a rare figure to publicly resist the US president's attacks. Jerome Powell is accusing the Trump administration of threatening him with prosecution to push the Fed into cutting interest rates. Every living former US central bank chief has issued a joint criticism of the criminal probe, describing it as an unprecedented attempt to undermine the institution. Charlie James has more.
Another bombshell dropped by the U.S. Justice Department. Sunday night, Donald Trump's DOJ announced it is weighing criminal charges against Federal Reserve Chair Jerome Powell. He's the man in charge of the U.S. Central Bank, controlling the monetary policy that shapes inflation, currency, and interest rates. Trump has attacked Powell for not cutting interest rates as aggressively as the president would like, and Powell called this action retaliation.
The threat of criminal charges is a consequence of the Federal Reserve setting interest rates based on our best assessment of what will serve the public, rather than following the preferences of the president.
The potential indictment is related to Senate testimony Powell gave back in June about the $2.5 billion renovation of the Fed's headquarters in Washington, D.C.
He's strong, he's committed, he's smart.
Powell was tapped for the job back in 2017 by none other than Donald Trump himself.
Thank you very much, Mr. President, for the faith that you have shown in me.
Former President Joe Biden then reappointed Powell for a second term in 2022. But since retaking the presidency, Donald Trump has not hidden his disdain for the man he chose.
People aren't able to buy a house because this guy is a numbskull. He keeps the rates too high.
The Federal Reserve is supposed to operate independent of politics. Technically, the U.S. president can fire the Federal Reserve chair, but it has never been done in the central bank's 112-year history, and the economic repercussions of such a move could be stark. Trump has already used the legal system to go after his political enemies, including former FBI Director James Comey, and criminal charges against Powell could create a legal opening to fire him.
Well, for more on this story, we're joined by Atakan Bakiskan, economist at the private bank Berenberg. Thanks so much for being with us on the programme. Let's begin where that report ended. Are these criminal charges likely to create a legal opening for Donald Trump to eventually fire Powell? And is that what this is ultimately aimed at?
President Donald Trump cannot fire Powell unless it's for a cause. Like the story said, this has never been done, and the legal definition for what causes is quite uncertain. But this is not about firing Powell. This is about undermining the Fed's independence. This is about political pressure on the Fed. And, economists rarely agree on something, but launching a criminal investigation to a Fed chair just because he didn't lower rates, I'm pretty sure every economist thinks it's a bad idea. If politics forces the Fed to cut rates and not economic data, if politics forces the Fed to cut rates, even though it shouldn't, then the result will be higher inflation, a weaker dollar, and higher long-term borrowing costs. This has been evidenced by research. This has been evidenced by a few countries, a few emerging markets. This is just going to happen. And, President Donald Trump is not going to get the lower borrowing rates that he demands unless Fed's credibility and Fed's independence is restored. So this is a fight that everybody's losing.
And do you think that this could ultimately lead to the Fed losing its political independence? And how would that, impact the lives of ordinary Americans? You made some reference there to how this might eventually turn out if it were to come into play, into reality.
Yeah, so, threatening Fed's independence, that drives long-term borrowing costs higher, right? And an ordinary American, they look at mortgage rate, they look at credit card rate, and that's based on 10-year treasury yield. That's not based on Fed's overnight rate. And the Fed can really only control the short end of the curve, right? And the long end of the curve, that depends on the bond market. And what the bond market pays attention to is to US's fiscal credibility, US's strength of institutions, and all these actions are just really not helping with bringing down the long-term costs. So I don't think this is helping ordinary Americans at all.
And in theory, the Federal Reserve, of course, operates independently of politics, outside the realm of politics, but does it actually do that in practice?
Well, I mean, the Fed backs up their claims with data, research, and yes, I mean it does operate independently, but again, these actions are kind of to influence that, to have politics to say in what the Fed can do. But I mean, there's a reason why the Fed is independent, right? I mean, why is that? Because for example, midterm elections are coming in 9 months, 10 months, right? The best thing that could happen for Republicans to win would be maybe have 0% borrowing rate. But if you do that, American consumer might feel good 1 month, 2 month, 3 month, but after that, inflation is going to surge, and once inflation surges, you'll have to raise rates back again to bring it down. So the Fed has been instituted so that these type of hungry behavior doesn't happen ahead of things like election, for example. I mean, the key to a long-term economic growth comes from price stability, right? And that's what the Fed is trying to achieve.
And given all of that, then, why is Donald Trump so adamant that interest rates need to be cut?
Well, I mean, so the US has a major debt problem, right? I mean, just last fiscal year, the US spent nearly $1 trillion just on interest payments. So that's just as much as they spent on Medicare and defense almost. So, I mean, a nation that spends more interest payments than healthcare and defense, that's hardly a strong nation, right? So I believe the Trump administration thinks that if the Fed lowers the overnight rate, that the US is going to be able to refinance its debt, and the US is going to be able to pay less interest payments on its debt. But that's just not how it works, right? Like, more than 80% of the US debt is based on 2+ year treasury yields. So it's really not going to help unless the long-term borrowing costs down. And you can't just run the entire US debt on T-bills, right? I mean, no, who's gonna buy all that? So I think the end goal is to, like I said, lower US's debt burden, but to lower US's debt burden, you gotta let Fed do its job.
And as well as lowering that debt burden, might Trump also be concerned about the possibility that Jerome Powell might choose to remain on the board of the Federal Reserve until his separate term as a governor expires? That's not until 2028.
Right. So Powell can stay as a governor until January 2028. His term as the chair ends May 2026. So, maybe he was going to step down from his role as a governor, but this launching criminal investigation, he could just as well, to retaliate against this action and to protect Fed's independence, to send a message. He can just stay on board till January 2028 now to, maybe be the voice of reason there. But again, Powell is only just one vote, really. But I guess time will tell what's going to happen.
But if he did stay on in that role, it would leave the Trump administration without the chance to fill another seat on the board. Do you think that's high in Donald Trump's calculations here? Of course, the White House says that it isn't Donald Trump who's pursuing Jerome Powell in the first place.
Yeah, well, I mean, Powell is just one option for the new Fed chair to come in if it's an outsider, right? But you have the Lisa Cook case going on. So if Lisa Cook is forced to step from her role as a governor, then a new person can come in. Stephen Miran is filling Adriana Kugler's term, which is expiring January 30. So maybe he'll step down and someone else can come in. I mean, there are multiple ways a new Fed chair can come in. Powell is just one option. But, if Powell were to resign and the Supreme Court allows Trump to fire Lisa Cook, then that could remain two open seats in the Fed. Maybe one will go to Kevin Hassett and one will go to Kevin Warsh. So you could suddenly have a situation in June where there are more Trump appointees than not. And that's why I think June is a very critical month. You're going to have a Fed under new leadership. You could have a more politically affiliated Fed. And again, like I said, the results would be higher inflation, long-term borrowing costs, and a weaker dollar. So just very excited to see what's going to happen in June.
And finally, Atakan, what do you think has led to Trump and Powell's relationship deteriorating so drastically?
Look, I mean, so Powell's Fed, right? They mischaracterized inflation in the post-pandemic inflation. They mischaracterized as transitory. They said this is a supply shock and this is going to go away. Light didn't. But like this isn't hard science, right? I mean, you can make a mistake. Economic forecasting is a very, very difficult job. So, all the economics textbooks, they were telling you that such big jump in supply chain pressure costs were going to, do a one-off increase in costs, which is just gonna come back down. But it really didn't. They didn't properly consider the demand side of the economy. There was a major fiscal stimulus. There was a boom. There was a surge in immigration. There was like a big fiscal impulse plus big demand side factors that was happening in the economy. There's an equity market that was booming like there's no tomorrow, huge wealth effect. So, that inflation would never turn out to be transitory. So Fed made a mistake, but, central banks do make mistakes. So, but I guess for Trump and Trump administration, this mistake has largely been, they think it's just Powell's mistake, really. They attribute that mistake to Powell. And I guess that's really the core reason why their relationship might have weakened. And again, Powell was also hesitant to lower rates at the start of last year, right? Because inflation was high and labor market looked good. So yeah, because on tariffs, again, it's inflationary. It's really hard to say the otherwise, and it did prove to be inflationary so far. We do see an increase in goods prices. So again, Powell was careful in that, and the previous Fed mischaracterized inflation as transitory. So those factors really, I think, made it difficult for Trump administration to really like Powell.
Atakan, we'll leave it there for now. Thank you so much for being with us, though. That's Atakan Bakiskan, economist at the private bank Berenberg.